All right, guys, back to work. Back to work. I know tomorrow is a holiday. Markets closed up for Juneteenth, but we have some beautiful charts right now. And I want to make sure you guys are ready to make lots of money when we do reopen on Thursday morning. Specifically, though, we have three important clues on the charts right now. Get a big move up from yesterday, a shallow pullback today, and these beautiful ranges on the charts right now. Put those three clues together, and we've got some beautiful bull traps on our radar for tomorrow. In fact, I have a number of great trades I'm tracking for, not tomorrow, but Thursday morning's trading session. By the time we're done tonight, you'll have an easy roadmap to make some money as well. Before we jump in, though, into my favorite trades for not tomorrow, but Thursday morning after Juneteenth holiday, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, Thursday night's video. And as always, if you guys enjoy these videos, if you like these lessons, hit that like button for me, will ya? And give me a shout out, give me a heck yeah down in the comment section below. Thank you so much for tuning in. The day before, a holiday coming up tomorrow. Charts are all ready to go here. NASDAQ triple Qs are all ready. Oh, the E-mini and the SPY is ready. I have three important clues on these time frames, right? These charts in front of us, they're telling us where the money-making trades are waiting for Thursday after the holiday. One very important clue, you can easily see we are bullish overall right now on the S&P and SPY, bullish overall right now on the NASDAQ and the triple Qs. I like to use these 60-minute higher time frame charts to tell us the best overall direction where the odds are stacked in our favor. But as much as I like these hourly time frames for direction, they don't give us the best levels of support and resistance, and they certainly don't help us time the perfect entry. I'm going to drill down to our faster time frames, our tick charts, in a few moments, and we'll cover more of the entry tactics. And we'll talk about, if I have time, the best bull traps here later on in the week. But before we do that, though, let's look at our schedule for tomorrow, because tomorrow it's not your average Wednesday. Tomorrow, of course, is the 19th of June. I believe the third annual now, Juneteenth holiday. Markets are completely closed for tomorrow. Bond markets, stock markets, futures markets. I believe everything is closed completely. But when we do come back after that holiday tomorrow on Thursday morning, two big news events coming out at 8:30 Eastern time. Jobless claims and Philly Fed. We do expect to see an uptick in jobless claims as people are forced to re-enter the labor market after all the stimmy checks now are starting to run out. I'll be watching that closely with students on Thursday morning. Keep that on your radar. We got quad witching. We got PMI come on Friday. So we're not done this week at all here. We've got a busy week ahead of us here after the holiday. Keep that on your radar. Not tomorrow, but again, Thursday morning, jobless claims, Philly Fed. Now back to our charts though, because hopefully by now you know we don't trade news. We want to know when the news is. We trade the chart in front of us. I mentioned earlier, there are three important clues right now. They're telling us where the money-making trades are for tomorrow. One very important clue here is this overall bullishness. This reminds us the buyers have all the momentum right now. But again, these higher time frames, they're not going to give us the right entry tactics. I like to use tick charts. Tick charts make pattern recognition so much easier. This, of course, is a 7,000 tick chart. All the time frames there in the upper left-hand corner. And if you're just finding my channel for the first time, here for the first time right now, this is the 21 EMA. It's pretty much the only indicator we use to find lots of winners every week in our trade room at 8 o'clock Eastern time. I mentioned earlier, there is three clues here, right? A big move up, a relatively shallow pullback, and a trading range. Now, why is this important? Well, first of all, anytime we see a big move like this, we always know the market's kind of overbought, and we know that even though price keeps grinding higher, we know the most amount of buyers are waiting for that nice deep pullback right now to buy nice and low, right? So we haven't got that deep pullback to kind of give the buyers some meat on the bone to buy that nice deep dip. That's one very big clue on this. The most important clue, I think, though, is this trading range. Now, if you guys watch my videos, you know how important ranges are in my trading style. Ranges are magnets, and they like to rotate, right? Down, up, back and forth as we go. So really, in all reality, there are three ways to trade a bull range like this. One way is to sell bull traps during that rotation back down again. The other, second way to do it is to buy bear traps underneath that trading range. The third way to do it is to buy a breakout and a pullback off of that trading range. So 3 ways to trade it. Why don't we start first? We're overall bullish right now. We're rotating higher here right now. Why don't we talk first about some bull traps off the high? We'll talk about those breakout pullbacks if we don't get the bull trap that I'm looking for. And later on in the video, we'll talk about buying those bear traps down here, because in all reality, that might be the most lucrative trade of the week this week after we come back from Juneteenth holiday. Let's talk about as we go higher here, because there are 2 types of bull traps I always look for. One is called a crown reversal. If you wrap together the failure pattern and the trap pattern we teach in the free video course, wrap those 2 together, you get a crown reversal pattern. They're very, very simple. Again, we know we're up into resistance. We know that ranges love to rotate, and we know that we're way, way high up because we still haven't seen much of a pullback there after that big move higher from yesterday. That's the situation that we're in right now. Now, let's get those buyers coming in. This is not a great place to be a buyer, right? You're buying into resistance up above a major range magnet below us. However, we're pretty bullish overall, so I can't just pick the top on this, right? I'm not going to blindly sell into a bull market like this. However, if I can get the buyers coming in and trying once to keep it going higher, pull back, lower low, try twice to go higher. See that lower low? Very important, that lower low. Now, lower low, buyers once, buyers twice. That's that failure setup we teach in the free video course. Then add in the trap pattern. The trap is right here. I want to see a strong red candle closing firmly below that 21 EMA. This is one of the easiest ways to time a bull trap off the high. Again, I'm not going to short that top unless we can get these buyers once, buyers twice. And think about it. All their stops now are sitting right there. Think about that move up, that move down, right? Think about that range rotation. And that's where this thing wants to go on the other side of that trading range. That is one type of bull trap we look for off the high. Now, one variation of this is a V-top. V-tops are very, very common after a big move. We may run up. We may not get that 1 try for the buyers, 2 try for the buyers. We may not get that beautiful bull trap off the high like this. Oftentimes, it'll run up and get whacked right back down again because everybody takes their profit off. No one wants to buy high. If that happens, if it V-tops off that high, think about how the market grinds down like this. If you guys are taking my free video classes or my trade room or watch my videos a lot, you know when it grinds down like that, this will separate off the 21 EMA. When it grinds down like that, market trend line off the low, pin it up around the high, and as we always say, look left, find some prior swings, and this is where the money lives, right there. That's where the money lives right there. This could be a bull trap, like I was showing you here. Sometimes what happens is it'll pop a little bit stronger, get above that 21 EMA. It turns into a failure pattern, right? Above the moving average, buyers get long and we sell into their stops, failures into pullback combos, right? All the stuff we teach inside the free video course. And again, ranges love to rotate back and forth. So mark the amount above, mark the amount below, leave that runner for the move down. And again, later on in the video tonight, we'll talk about how to buy down here because again, that is where probably one of the biggest winners could be of the week, maybe the month here of June so far. Those are 2 types of bull traps I look for off the high. Now, also too, keep in mind too that sometimes because the market's so bullish right now, sometimes we'll run up, we'll get a bull trap off the high, we'll get that run down, but again, it's a range. They may hold that breakout pullback, run back up, retest the high, and give us a second bite at the apple, right? So don't be surprised if we get a bull trap short, we get our 1-to-1 off the high, stop moves down to point of entry, right? Remove the risk, lock in some reward. But again, because they're so bullish overall, they hold the top of that range, they run it back up to retest the high. And again, do it again, right? Do it again. Look for that 1-2 bull trap off the high, crown reversal, or a lot of times these double tops up here, it'll V-top like that and begin grinding down. Mark off that low, mark off that high, look left, find those prior swings, and don't miss that first test, right? Do not miss that first test is the best test off of that high. So again, double tops in these scenarios, it's not a bad idea. Look for the pattern again, a second bite at the apple. Now, I do want to talk about the breakout pullback come up next because, it's an overall bull market. Everyone's riding high on the idea that inflation's now under control. The Fed speakers said they liked what they saw this afternoon. So we'll talk about the breakout pullback in a moment. Before we do that, though, let's slow down for a second because I know that most of you guys and gals watching right now, you know these patterns, you know how to trade traps and failures, V-tops, crumb reversals, but if you're watching for the first time right now, this might be a brand new language for you. I do look at things quite differently here on these YouTube videos. If you're brand new here, if this is way over your head, don't you worry. I teach all these entry patterns. I teach failures, traps, breakout pullbacks, everything in a lot more detail than this. I cover everything in our free trading classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free video course because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room so we always know where the best winning trades are waiting for us every day. Then most importantly, we'll time the perfect entry with failures, traps, pullbacks, strength trades. Again, I know it's a lot to learn up front, so hit the link up top there, learn the strategy, learn the system, start making money on your own. Guys, the markets are so good right now. If you're not making consistent money, if you're missing the best trades, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link up top there. Take that free course. Perfect for someone trying to make the jump into full-time trading because most importantly, it'll give you a simple roadmap to follow so you always know the day type and where the best entries and exits are going to be each day. Also be aware too, if you can't get a link up top there, I'm going to put all the important links tonight in the description of the YouTube video. I'll put my free class links down there. Start there first. We trade together every day, 8 o'clock Eastern time with members in our trade room. I'll put trade room information down there for you. And also too, I post a ton of updates on Twitter or X throughout the day. If you're on X or Twitter, give me a follow. Again, all the details, description of the YouTube video. But now let's talk about that breakout pullback, right? Now we know how to short a bull trap off the high right now. And again, later on in the lesson, we'll talk about a buy the sucker back up again. Let's talk about though now about a breakout pullback. Now, breakout pullbacks, in order for us to break free of this trading range, I need to get up, I need to pull back to the moving average and jump off that moving average. In my trade room, I call these 1, 2, 3 moves or 1, 2, 3 breakouts. In other words, it's a 1, it's a 2, and a very convincing jump off of that moving average. All right. So be aware, if we make a strong run up, that's not necessarily a breakout we can buy, right? It may roll all the way back down again. However, if they run up, they pull back and they hold that pullback and jump. Okay, now we have a successful breakout of that trading range. So that is how you know when you have a successful breakout. Now, if we do see this successful breakout, now all of these areas of resistance now basically get flipped into areas of support. So we break out running higher. Again, it will probably not be one straight line, right? It'll go up, pull back, and jump right off that moving average. Now, that is the setup. Once we have the breakout qualified, now look for a breakout pullback. Whenever I think of a breakout pullback, the first thing I think of is a two-legged pullback. What's a two-legged pullback? A two-legged pullback is just like it sounds. It's one leg under the moving average, two legs, and as always, it's a little bit more than a measured move, right? I want to be at that measured move. The best ones are a little bit more than a measured move off of that pullback. Now that will give me the general idea, right? That will give me the level in which I want to enter. But remember, there's a range down below us right now. I'm definitely not going to blindly buy that level because it might end up running back down, grinding down here and giving us a beautiful short off that high, right? So I'm not going to step in front of that freight train and buy blindly. What I'll do now is I'll wait for the price to pull back that 21 EMA. The 21 EMA, again, it's one of the most important tools we use every day in our trade room. Now, at this point, if the bears are going to grab this, they're going to do it right there, right? Keep it going, and you guys have a game plan to make money on that if it does. But if I start seeing these bears try once to keep going lower, try twice to go lower, yeah, see now I can use their stops, to fuel that move going higher. In the free video course, we call these failure patterns, right? This one's a 2-try failure because the pullback is so significant. Now, those failures, where does the market want to go now, right? Now we're running all the stops from those sellers. Where's the market want to go? It wants to go back up and take out that high. What it actually wants to do is it wants to complete a measured move. The breakout leg, measuring leg, that's actually what it wants to do. My targets, though, are always back up to retest the high, right? Leave a runner for the measured move. So what we look for is, before we go back up and take out that high, watch closely. I want to see a separation off the moving average. I want to see a shallow pullback. That shallow pullback will barely miss the moving average. Very important. A higher high in price and a trap right below that low. We call these failure into trap combinations in our trade room. And again, this is a bear trap. These are called trap patterns in our free video course, right? So once again, recap here. This needs to be a pop up, pull back, and jump, right? Very convincing jump to get liftoff, right? Imagine those rocket ships, right? The Elon Musk and SpaceX, right? They have to jump off that moving average to escape the Earth's kind of gravitational pull, right? That range is a gravitational pull. We have to get enough liftoff, right, to get away from that thing. Then we can buy on the pullback. It's that 2-legged pullback, a bit more than a measured move, get around those prior highs, and again, trap those bears in. And that's my favorite way to trade these situations. 1-try, 2-try, failure pattern. And then as we go higher, add on to the trade, jump back in again, higher high in price. And again, the best ones of these are going to barely miss the pullback. They're going to barely miss the 21 EMA when they pull back. Shallow pullback, higher high in price. Strong green candle closing above the 21 EMA. Again, this will make a lot more sense once you go through the video course, the free video course I linked up in the upper right-hand corner. All right, guys, that is how we look for a breakout pullback. And I'll tell you, if we're lucky at that point, might get up. We might get that 1-2, that crown reversal, right? We might get that V top grinder back down again. So keep that stuff on your radar on Thursday morning after the holiday tomorrow morning. Now, we save the best stuff for last, but we also save the more difficult stuff for last, because if this thing rolls over, this could really, really dump off the high. So how do we time the entry on this stuff? How do we buy into that? Because this could be a pretty sharp correction if we get the bull trap. I'm hoping for what we do, not tomorrow, but Thursday morning. How about some NASDAQ? NASDAQ getting lonely over here on the NQ, the triple Qs. We know we're bullish overall. You did not tune in tonight to figure that out. We know we're bullish overall. We know overall direction. On the NASDAQ right now, very, very similar clues. Big move up, relatively shallow pullback, nothing really dropping yet to give the buyers some meat on the bone, right? To get long, nice low price here. That range is a huge, huge clue though, right? Because again, we know that ranges, they love to rotate back and forth, right? Back and forth. We can sell high with bull traps. We can buy low with bear traps. And again, as I mentioned earlier, who the heck knows? We might easily keep on ripping higher here. We mentioned Elon Musk and SpaceX. We might go to Mars, right? The rest of this week, and get that breakout pullback right off the high of that range. So how do we buy that move going lower here? There are really two things you have to be prepared for. One is if we end up going up and then dumping all the way back down in, let's talk about that, because that is going to be a very strong run going lower, right? If we run up, get a beautiful bull trap up there and run back down again, this will be a hell of a strong move going lower. And why is it important? Because even though we're overall bullish, if I see a very strong correction off the low, the sellers are going to come in, try to hold the underbelly of that range and run this thing to retest that low. Then we oftentimes get the biggest move back up again. Okay, so again, if we end up running higher and then crash back down, that move lower is gonna want to hold the underbelly of that range, because again, breakout pullbacks, and retest that low again. Okay, that is the sequence I'm kind of preparing for in this scenario. So with that said, if we do get that run up and run back down, anticipating resistance right in this area again, I'm going to look for one of those same crown reversal patterns. Look for the bears to come in, try once, try twice, and try to buy as low as I can. Remember, it's one try, two try. I don't want to buy though as we go higher here, because again, if this really rips running lower, it will have a hard time clearing the underbelly of that range. I want to be in the green on that trade before we get there, right? Makes sense? So the bear trap entry, 1-to-1, take some profit off, underbelly there, and leave that runner back up into that trading range, because of course it will want to go back up into that trading range. Now, if we're lucky on this, if we're lucky, we'll get the bear trap there, we'll run back up, we'll separate away from that moving average, and we can add another bear trap on. Remember, shallow pullback, higher high in price, and you want that trap entry right there. That would be a great sequence. Again, the game plan is it goes up and rolls back down. Very strong. Trap the bears in. We're getting paid on the 1-to-1 before we run into these levels of resistance. Ideally, we keep on going. We get through the area here. It's a bear trap entry on the way back up again. Okay. Now think about this. We may end up running lower. We may get that bear trap entry down here. It may pop up, hold the underbelly here, and retest the low. Now, we talk a lot about these here on these videos. These double bottom retests are oftentimes the best entries, because now all the bears are committed, right? They're now in this move already. And when they get down to that low, they become buyers, right? If I'm a seller up here, right? If I short this breakout pullback off the underbelly of that trading range, my profit targets now are where? At that low. So sellers here become buyers down here. Now think about who comes in and sells right here. Who sells right there? Not the experienced traders. These are rookie traders, right? They're selling it short. I sold trades like this all the time when I was a rookie. That's why I know these work so well, because I was on the wrong side of those way too many times early in my career. At this point now, we don't need that bear trap entry. All we need is that failure entry. 1 try, 2 try. Why 2 tries again? Because I like to use, just my style, I like to use stops, right? I like to run stops, because if you're caught short right there, you get squeezed out. That's what produces those strong runs going higher. This is where a failure into that. Now the add-on entry is always a bear trap. At least for me it is, right? Always a bear trap there is the best ones right there, right? Those add-on entries, I'm going to buy as low as I can, right? I'm going to buy as low as I can as it runs higher. And so I want to look for the bear trap entry as it goes higher. All right, guys. So again, it may roll down, pop up. We're in the money to trade, right? Make money to trade. It retest the low. Do it again. Another bite at that apple. These double bottom retests are not reversals. We're so high up right now. It takes a lot more than double bottom to reverse this thing into a bear market failure, into trap pattern as we go, right? Keep an eye on that as well. And of course, the least desirable will be, we may end up all the way down. There could be so many buyers down here. We don't get a chance to trap the bears in, and it whoop right back up again. If this thing V bottoms off the low, you know the game plan, right? That V tops off the high, right? V tops off the high, look for the grinder and short the top of that pop and grind channel, right? We call them pop and grind channels in our trade room. If it V bottoms off that low, it's the same sequence. I want to buy as low as I can, mark off that high. Whatever you do, don't chase this thing higher, right? Do not chase these things going higher. Wait for the pullback. Wait for that first test is the best test. And again, my kind of vision on these is always look left, find some of these prior swings here. The best entries I know about, right, once we get tomorrow or Thursday morning, is to trap in those bears below prior swings. And again, oftentimes this will be a technical bear trap. It'll be a failure pattern, which is kind of a variation of a bear trap, right? A pullback combo going higher, another bear trap going higher. Again, I'm simply drawing the screen right now. There are hundreds of examples of these inside of our free video classes, right? So trap patterns, failure patterns, right? Trap patterns on the way back up into that trading range, right? One more final variation of this. If we don't get that big run down, we may wind up top here. We may get that bull trap off top here and run back down, but we may only get, right, a shallow pullback around there. We may not get that big dump as we want to, right? I want to get the deep pullback right now, but we may not get it. We're very bullish right now. And of course, a holiday tomorrow, so it's tough to tell exactly what happens on Thursday. So if we go up and roll lower, right? If we start holding off support level, remember, this is a range, it's gonna wanna rotate back and forth like this, right? So if we hold that low, how can I buy right there now? Well, what's the problem? The problem is I'm buying relatively high, right? So what I do is look for a way to buy as low as I can, and that will always be, no matter what situation is, with a bear trap pattern. Right? Now, see what happens here? I mark them on above, mark them on below, right? Can I look at that area there? But most importantly, if I can get around that area, I may not get that big dump I want and back up again. That's fine. But because I'm not very low on the chart right now, the trade I'll look for tomorrow or Thursday morning, is that bear trap entry. Because again, the bear trap entry gets me in nice and low, right? That's why that's why there's such great patterns, right? Like right here, right? They roll off that low. Bears trying, bears trying, bears trying. No surprise, right? There's no surprise. The buyers want that trap entry right there. That's the same idea as over here, right? Same idea. Buy as low as you can, right? The reason why the buyers want that trap right there is the same reason why I want, as a buyer, a trap right there, right? Because again, we haven't pulled back that big pullback yet after such a big move yesterday afternoon. Right, guys? Boy, I covered a lot in this video. Don't forget, learn the roadmap, learn the setups in that free video course I mentioned earlier. It's all linked up in the description of the video or up there, link up top there in the upper right-hand corner. Have a very, very happy Juneteenth holiday tomorrow. Be safe. Come back with all your fingers and toes on Thursday morning. And again, that's the game plan, not for tomorrow, but for Thursday morning. Now, speaking of Thursday morning, tomorrow morning, right, markets are closed. On Thursday morning, though, I can't think of any better way to learn to make consistent money in the markets than to come out and do it with us, trade with me every morning, 8 o'clock Eastern time. I'm going to put all the important links tonight in the description of the video. Start first with the free video course. Start making money on your own. Learn the roadmap. Learn the setups. It's much easier than you think it is. And as always, any trouble getting access, get questions on the way, don't be afraid to call the office, use live chat, or drop a comment question in the comment section below. Great job this week. Enjoy your day off tomorrow. I hope you guys learned a bunch here tonight, and hopefully I'll see you sometime soon trading with us in the morning room as a student here at School of Trade. In the meantime, be well, be nice to each other out there. Have a great holiday tomorrow morning, and we'll see you guys next time. Adios, amigos. Bye for now.